Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Connect, president of Universal Accounting Center. What we're actually doing here with the show is actually addressing various things that you as owners of bookkeeping, accounting, and tax businesses need to consider as you're running your companies, offering quality accounting services and getting you paid what you're worth. It's here on the show that we have guests, experts in their own right as to what it is that they need to be doing in their businesses or helping us with ours so that we can actually excel and thrive in our companies. Now, as we're doing this, we're going to be addressing various topics each and every week with these guests. And these topics range in a variety of topics. But today we're going to talk to someone who actually has a lot to say about her firm and what it is that she's doing to make a successful business. And one of the things that I'm excited to do is actually share her story. So this happens to be Lera Kooper. She is the owner of the Accounting Services, a CPA business advisory firm that focuses on building long-term proactive partnerships with business owners looking to scale and grow their company. Their advisor offerings cover everything from tax planning and entity selection to advanced projections and modeling using financial planning and analysis tools. So, Lera, welcome to the show.
Thank you very much. I'm happy to be here.
Yeah, this is going to be a lot of fun because one, I want to start with your story. One of the things that I like to do is actually begin with what got you into accounting. So give us a little bit of a background, a story as to how this all happened.
Sure. Great question. So what got me into accounting in the first place was just practicality. I went to school very young and did not know what I wanted to do. And my father's advice was go into money. It's practical. It's everywhere. You'll find an application for it. So that's how I got into accounting. Once I finished at the university, I started working for a small CPA firm. After a few years, that CPA firm sold and I went with the sale. And after a few years, I realized that the way that tax and accounting is being offered to business owners currently just is not very helpful to them. And so after a few years there, I actually reached out to my first employer, the one that sold the business, and he's now one of my business partners.
Oh, interesting. Okay.
Yes.
So in that transition, when you came back and said, I guess I don't know what the conversation is yet, but the point is when you came back and said something, what was it you were asking? That you create a partnership together or find more employment or new employment with them?
Essentially, so he had sold a CPA firm so he could invest in one of the clients. One of our clients, not a CPA firm, so he was acting CFO there. And after each of us had spent a few years in our respective positions, I just realized I did not want to do another season the way that I currently was. My husband and I budgeted. We figured out worst case scenario, I'll make coffee for a little bit, but I'm not doing this. And so I reached back out to Dave and I just said, hey, I don't know if you have anything coming up or any projects, but keep me in mind. I remember enjoying working with you. And he said, it's actually very coincidental timing because I've been looking at purchasing CPA firms again lately with the intent to flip them. And that's how we started our partnership back in 2020.
Oh, I'm liking this. So as you reach out and you talk to Dave and actually come up with this partnership, what was the term of that arrangement? Because obviously as a partnership, it's different than you going back as an employee.
Absolutely. And originally, because I had no capital or anything, I'm just starting out in my career. So it initially started with phantom shares. And then after about a year and a half, we realized it's requiring a lot more of my investment. And part of that investment was just not getting paid very much. And that's how it goes when you're pouring yourself into a business. And so then I became an equity partner not long afterwards.
Excellent. So with this relationship, you indicated that he was interested in going and buying CPA firms with the intent of flipping them. Mm-hmm. Which did you find was more valuable, the growth of the firm that was more organic or the actual acquisition of firms and incorporating them, bringing them into the business model? What was the focus, I guess, of both of your efforts?
Both come with pretty significant challenges. Just with any business, the acquisition model worked for us because it allowed us to grow very quickly. We could get cheap debt at the time. And these acquisitions came with not only a book of business, but employees. Yeah. And that allowed us to keep our time focused working on the business rather than getting back into this billable operator role. And we know that's one of the biggest challenges with firms that are trying to go from being compliance driven to strategic driven is they don't have the time because they have to buy it back and then spend the time on these strategic initiatives within the business. And so we really put in the investment of, okay, let's do this. If we're going to flip it, we need to work on the business.
So when you were looking for firms to acquire, where was it that you were going to find them? Were you working with a broker? Were you actually going to particular lists like the Journal of Accountancy? I mean, where were you finding these that were available to be sold?
We started with a broker and we used him for our first two acquisitions. And he's done a great job. We obviously know what we're looking for because we're in the industry. So a good broker from one that leaves a little to be desired. So we've been very happy with him.
So what is it about that broker that you found to be very helpful and complementary to what you were trying to do with your business?
For one, he's responsive, which it's great. He's responsive. He gets you connected with the owners very quickly as well. And his memos were very well put together. There's a lot of garbage out there when you see the write-ups on these businesses.
Yeah. Now, when you're looking for firms, what were some of the KPIs or things that you would look for in the organization to know that this was a good find?
Our primary focus, what drove us to this model, is wanting to help business owners. So we're looking at the client base as a whole, is how much potential is there. Even if it's 1040s with Schedule Cs, there's business potential there for us to grow our engagement and have higher value client groups. So that was a large factor. Of course, it's nice to have the owner stay on for a year or two just through transition, and there's little logistics like that you have to work through. But the client base was a big portion. And then we started with a smaller firm. It was about 500,000 in revenue, the first one that we went in on. And what's nice is you have this arbitrage effect as you acquire and as you grow, because now if we buy a firm that's $500,000, it's worth more the next day after we fold it in to a firm of our size.
Very good. Now, as it relates to now, you've identify obviously one that you're interested. How do you value that firm to know whether or not you're going to make a good offer? I've heard people that do it based on revenue, some do it based on EBITDA. How are you evaluating that book of business and that business model to actually give an offer?
Yeah, it's tough when you're looking at firms because all you get is financials. You don't get to meet the team. You get to meet the owner, which I think is very representative of how they run their business. And that's a lesson we've learned as well. But for me, what I'm looking for in a firm is exactly what we're doing to make our own firm more valuable. And that's how many processes in place? How are they leveraging technology? Do they have development tracks for their internal team? Because I think it's a lot more about the team than just the business on paper, because with a good team, you can accomplish anything and you can move quickly through change management. And with one that is a little bit slower to come along, it obviously slows down your own progress.
So when you were talking about the evaluation, one thing that I heard you say, and I'd like to dive a little bit deeper in there, is the complementary tech stacks. One of the things that I think is very important is how quickly you're going to be able to integrate that business into the current business model. And if there's that similarity in tech stacks, it can be a lot better. The staff obviously knows the same tech stacks that we're using internally. They're able to actually migrate that a little bit better. Is that something that you considered?
Yes, so it's absolutely a consideration, but honestly, the more of a mess it is, the better it is for us because we have the tech stack to absorb them and we get to pay a lower multiplier. So for me, that's not something, it's not a deterrent because I know we have the solution and we've gone through the process of change management with team members, with clients, pricing, technology, all these things. So, and that's how we built the business, is we built it to scale and to be able to quickly absorb, since I know acquisitions will continue to be part of our growth strategy.
Very good. Now, you were talking about multiples. A lot of the recent ones I'm familiar with are multiples of revenue. Is that what you were
Mhm.
gauging your valuation on?
Yep.
And
Yep.
what was the range that you were willing to consider?
Pretty typically, I think for a traditional CPA firm, you'll see zero 0.8 to 1.1 or so.
Mhm.
Obviously, the more revenue they have, the higher the multiplier just by default. You might be getting up to 1.3, 1.5 as you start hitting those marks on infrastructure that I mentioned, as well as getting closer and closer to that $5-10 million range in revenue, the multiplier just skyrockets. And so that's where we see that potential in arbitrage.
Oh, I love this. Yeah, that's exactly what I'm familiar with. That zero 0.8, as you mentioned, being that low end, the zero point
Mhm.
0.1 or 1.3 to 1.5 on the high end. Yeah, that's the range that I've seen
It's not a huge
recently. Seems
range.
pretty good. Yeah, it
Yeah.
is. Well, the ones that I'm familiar with, I know of one that did a 0.9. I know another one that did a 1.1, one that did another 1.3. So, I mean, you're stating what I'm noticing just in
Yeah.
the conversations I'm having. Now, as it relates to your business model, you commented that it was with the intent of not really absorbing them, although you did use that word. You also did talk of flipping them initially. So I'm curious, how much of the new acquisition was truly absorbed, or did you keep it separate with the intent that it was going to ultimately be rolled off?
So every acquisition, and then the last one was a merger when we brought in our third partner, we rolled them in under our brand, under our
Mm,
tech stack. So we truly are operating as one team. At
okay.
our current size, that is the way to go. There's 23 of us, including the 3 owners. And so I think it'd be too much to manage them separately. Now, if we go the platform firm route, maybe as you scale, there's room for different management teams and client bases, but that's not quite where we're at yet.
So have you now done this long enough that you've actually been flipping them out? Have you actually sold off parts of the businesses that you've acquired?
We have not sold off parts of the business only because I'm holding out for a higher multiplier than 1.3.
Gotcha. Very good. I'm loving this conversation. Now, one of the things that I'm sure my audience would appreciate is now as you're acquiring the businesses, where do you find that you're basically getting the revenue? Is this a bookkeeping and accounting type business model? Is it a tax planning and preparation type model? Is it more the CFO and advisory services? Where are you finding your revenue coming from?
So I think the beautiful thing with growing through the acquisition model is we've brought on some incredible team members, and that has allowed us to departmentalize. Our first acquisition came with 5 team members. Now we're at 23, including the 3 owners. And so now we are able to have a tax department, an accounting department, and then this advisory veil over everything, because that's how the team has been educated, is to not only keep an eye out for advisory opportunity, but to deliver on it as well. And so we do a little bit of everything, but the focus of our firm, our model, is to help business owners get more out of their business, which means starting with accounting and coaching and making sure they have access to high quality data so they can make high quality decisions.
This is beautiful because you're speaking my language. This is
Awesome.
exactly what I espouse all the time. I speak of what are referred to as the 3 core accounting services: bookkeeping, accounting, tax planning, preparation, and CFO advisory services. And those
Yep.
3 areas of the business are clearly
Yep.
what I feel the clients are expecting from the accounting profession. So for your firm to be able to offer each of those 3 distinct services is powerful. So the question I would want to know is, as it relates to revenue, can you share what percentage of the firm's revenue comes from the bookkeeping, accounting services versus the tax planning and preparation versus the CFO and advisory? Do you know where the percentage distribution is?
That is a good question. I can't tell you exact numbers off of the top of my head, but what
Mhm.
I can tell you is when we acquired the firms, they were all tax driven, and accounting was just the necessary evil to get a tax return done.
Yeah.
And so over the course of the last 5 years, we've worked on upselling our existing clients on year-end review, quarterly review. Okay, now we have monthly accounting, true monthly accounting work and CAS work and coaching, and we're helping them really make business decisions that drive profitability. And so over the course of the 5 years, I would say we've now gotten to the point of revenue being split pretty close to half and half, maybe leaning majority more towards the accounting side, which for me is a beautiful thing to see, because the tax return should just be a box you have to check at the end of the year and not the reason you start a conversation with your CPA.
This is lovely. No, you're saying a lot of wonderful things here because one, you said the comment of necessary evil. It's educating that business owner that there's so much more service that you can offer them as it relates to their business and helping them be successful. So to
Mhm.
help them see the valuation of the quarterlies and the monthly financials, that also gives you a greater stickiness component to your client acquisition because now they're going to be paying you monthly for that recurring service. And so this is powerful as it relates to increasing your average revenue per customer. So now all of a sudden, instead of being paid only for the tax return, they're actually paying you for additional services. So your client revenue is much higher. And then in addition to that, you're going to increase the lifetime value of that client because the client was not just paying for the tax services now. So, I mean, there's a lot of
Yep.
intricate benefits from what it is you're describing here. And when it comes to selling the business, now you've got a higher lifetime value, you've got greater revenue per customer, you've got a greater stickiness. So there's a lot of things that are going to help with that multiple that you're trying to increase. So well done.
Thank you. Yep, that's the idea. And then the monthly recurring revenue, that's a huge value add as well. It's nice for clients to budget throughout the year, to have a fixed fee. It's really nice for our own cash flow in an industry where typically you do the work and get paid a year later. So it's nice. It's very practical today, but a huge value add for later.
Exactly. Yeah. The way I distinguish between the two, and this is maybe a nuance on my part, but those that are who are familiar with me know that I distinguish the type of tax services that are yearly as being a customer, simply because of it's not being recurring and so forth, even if it occurs year over year. But the client relationship is that recurring relationship that is more monthly or quarterly. I'd rather have a ton of clients than a ton of customers. The clients have a much more embedded relationship. They're much more beholden to what's going on. There's a stickiness component to that. And so I want not customers, I want clients. And so that's a distinction between the terms that I typically try to use.
I agree.
So,
And it's a huge benefit to the internal team as well. Nobody went to school for this or became educated for this just to crunch numbers and do data entry all day long, right? They want to put their knowledge to use and actually help people. I think typically that's the downfall of accountants in many ways, is we want to help so much to the extent that we become nonprofits. And so when we're able to marry that quality of wanting to help with the productized services and advisory and the opportunity to do those things in the bandwidth, it makes for a very fulfilled team as well, I think.
oh, 100%. The thing that you're referring to there is what I call giving voice to the accounting profession. I think we have so many insights as it relates to the numbers we're looking at. It is the language of business and it's talking to us. And so if we can actually now take that education, that experience, that perspective we have and bring it to our clients, that's such an additional value add to the relationship rather than just preparing the reports, handing them over and hoping that they get utilized somehow. So that's powerful. Now, it does bring me to the next part of the conversation where I want to move into the CFO services, because that's exactly what we're doing. How would you define your services when speaking with a client as to how CFO and advisory differs from the accounting or tax planning that you're perhaps providing?
Great question. So I liken good accounting to the gym membership, and actually showing up to the gym and using the equipment as working the data and where the magic happens. It's what we refer to as financial planning and analysis, good budgeting, cash flow, what if scenarios. If you have goals, the only way you can target your resources properly is obviously to plan for that and to craft your strategy rather than just letting it happen to you. And so that's what we call the workout. And then good accounting is just the baseline. It's the gym membership. You could either file it away in your inbox, not use the gym membership, or you can work the data.
You know, one of the things I would add, just because of your example of the gym, you can actually have a workout schedule, something that you should be doing as a plan. Somebody could actually give you those things that you're needing to do. But when you're actually working with a professional trainer, somebody that can observe you doing the things, it's when you have a coach that's literally looking at your exercise routine and saying, you know, you're actually doing that incorrectly. You're going to hurt yourself if you continue to exercise that way. You need to do this form. You need to do it this way. But they're also there as a cheerleader. They're saying one more rep, one more repetition. And what we're trying to do here is we're trying to actually help the business owners implement very good strategies in their business. But when we just give it to them as a piece of paper and we say, hey, do this, or more importantly, we just say, go to the gym, here's your membership, walk in and pick whatever machine you want, they're not going to utilize the right things. They don't have that expertise as a professional trainer to say, okay, that's the machine I should be doing. I should be doing it that long, that many repetitions, and I should be doing it this way. We have so much more to bring to the relationship. And when you get paid as a CFO advisor, you're able to come in as that business coach and literally help them with so much more than just the financial reports, the accounting, maybe doing the tax preparation. That's where I think the business really can take off with the relationships that we're having. Would you agree with that?
Absolutely. And that's what we're gearing for as well. I mean, accountability services, it's accountability that makes the difference, right? And then that relationship of working with the client throughout the year. And the hope is when things are going well, or more importantly, when things aren't, we're the first person they call, because we can be working there shoulder to shoulder, trying to brainstorm, okay, how do we need to pivot? How do we need to adjust this? And then they're not alone in it either.
I'm really pleased to hear that you're doing exactly this, because I know your clients are going to benefit tremendously from it. So when you're talking about CFO and advisory services, there's two things that I'd like to kind of dive into. One is, how do you choose to describe it when you're selling that service to your clients? How do you explain what it is they're paying for? And then the second part of that question is, what does that experience feel like to the client? What are the services you're actually doing when working with that client over the coming months as you're onboarding them and taking care of them, such as providing forecasts, doing cash flow management, diving into the business model? What does that look like? So how do you sell it? How do you explain it? And then what is the experience like?
Good question. So the selling side, very similar to the conversation we just had. And we have recently, in the last year and a half or so, productized FP&A, financial planning analysis, where it is something that is easy to train. The experience is consistent. And so we can really provide, anybody on the team can provide this deliverable and this level of service. And so at this point, we have sample reports that we can share with dummy sets of books, and we can walk through here's how we got here, and here's the potential and the decisions that you could be making based off this information. We were lucky enough when we were starting to productize this that we just had about 15 clients that trusted us when we said, hey, you really need this based on either your revenue goals or your runway. Let us do this with you. And those were our R&D clients. And then the response from them, I mean, the greatest thing is just peace of mind. How many times do you talk to a client where you haven't even given them the answer yet, but they feel better just because they know they're not alone and there is a path forward?
Oh, just that last part is, I think, so valuable. When they finally have that trusted advisor that they can lean into. It's lonely at the top is a phrase that we often hear. And what we're trying to do is, and these are my words, it's recognizing as an accounting professional that you probably know more about this business than anyone else in the organization. And the reason why I say it that way is these business owners, they oftentimes don't want to go to their spouses and say, hey, we just made $1 million profit, and find out that they're going to do now a swimming pool in the backyard. It's not going to the spouse and saying, I'm struggling financially, we're going to have to actually do a second mortgage on the home. These are things that they're contemplating and considering, but they don't want to go to the family for. The same thing is with the employees, not wanting to go into the management and express some of the frustrations or challenges that they're experiencing. So to whom do they have these conversations? With whom are they actually now confiding and actually saying, here are the thoughts that I'm having. How do I deal with these things? And because we're so familiar with the financial numbers, and oftentimes we can help them address the financial capital needs that they have, these are the conversations that they're typically going to explore. Do I have the revenue, the capital to open another office, to expand my warehouse, to offer more services? These are things that we oftentimes get to discuss, and they're probably the first times they're speaking with anyone outside of the thoughts they have in their own minds. That's a powerful thing to consider and realize when you're that strategic advisor working with a client, beyond just being a bookkeeper or a tax preparer. Wouldn't you agree?
Exactly. And that's who benefits the most from our relationships, is those that use the relationship, they use the gym, they take advantage of our team. And I think as a business owner in any industry, it's very easy to catastrophize when things are going poorly.
Yeah.
And depending on who you talk to, that can either make it better or worse. And we've seen all sorts of things about when you're stressed out, make a list and you'll feel better about it. But when you talk to somebody that knows what they're doing, they've seen other businesses go through the same things or at least similar, you're able to take that spiral and contextualize it a little bit better and like just get a plan. I feel like a broken record when I'm saying it's good to have a plan, but it's good to have a plan and be ready to adjust it.
100%. Yeah. When I've met with my clients, the catastrophizing, like you described, is something I'm familiar with. They'll come and I'm able to walk them back from the ledge, point out that there's different recourses, different options. And when I'm meeting with my clients, I'm able to give them a perspective that they don't have because they're stuck in the woods of the day-to-day operations. And I'm able to step back and say, well, there's these different choices or options, and choice is better than no choice. And when you can put multiple options down, that helps them realize that it's not just as black and white as they may think it is. And so oftentimes that is that walking back from the ledge that I think we're alluding to. So I'm curious, do you have either a price that you charge for specific CFO and advisory services, or a range that you actually have these services billed at?
It depends. So yes, we have some baseline pricing, and the scope of it, these engagements always begin with, of course, making sure there's a baseline of accounting and tax and that engagement's in place. We always start with a launchpad meeting. And so there we go through and triage what is immediate and measurable, what's proactive, what's strategic, what things do we need to have on our radar, so then we can develop benchmarks, KPIs, anything to monitor back from that. That process in itself is available on its own. You need that trainer at the gym. And so typically we bill monthly. just for the monthly meeting, the budgeting, the cash flow, the what if scenarios. And it depends on the complexity. So if it is a $30 million company, it's going to look very different than someone that's pulling in $3 million a year, or it's just 3 employees versus they're looking to expand locations and so on. So it's very variable.
Yeah, I'm going to ask this question after giving this range. What I've found with the different firms that I've been associated with and looking at some of the industry norms is typically for CFO and advisory services, it's generally as a national average ranging between about $1,500 to approximately $3,000 a month for the services. I do know of some firms that actually charge $5,000. I know of actually some firms that work with law firms that are charging $10,000. So you're right, there are these various ranges that you could look at. Obviously, if you specialize in certain industries, you can have some flexibilities. Larger firms, obviously, or companies can actually afford so much more as it relates to the services, and they're probably able to engage and implement a lot of the strategies differently. But that range of about, nationally, 1,500 to about 3,000 is quite common. Anything outside of that is typically more a niche kind of approach or a specific industry type of strategy. Is that similar to what you're experiencing in your firm?
Yeah, I'll give you a straight answer. So I think we need to raise our prices after you're sharing that. Typically, we're starting at about $1,200 a month.
Okay.
And again, depends on complexity, how many of the team members need to be in on this client in that relationship, because there's 20 of us, or 23 of us, so it could be 1, or it could be 3, depending on industry experience and experience with the types of goals that they have. And then that'll recur monthly, of course. So
Yeah,
I think we'll
the
be raising
way
our prices.
and there's an idea there. Help with your valuation as well.
Yes.
The thing that I'd point out is there's 3 things that we have found as good price points as it relates to value or CFO and advisory services. One is the fee, the $1,500 to $3,000 that I was mentioning, for us to work with the business owner. If the owner, and I'm going to try and keep this as simple as possible, if the owner is someone that loves the ideas that we're bringing to the table and struggles implementing them, which is to say, it is difficult to learn something, realize that it needs to be done in the company. You're sold on the idea of something needs to change, but to go to your management team and be the communicator of, hey, I just learned something, we're going to do something different. They sometimes want to involve us as the advisor to come in and be that messenger. And so there's a fee for us to come to the management team, educate them as to what's going to be changing in the company and help in rolling that out, rather than leaving the business owner to be that messenger. So if they're wanting us to be involved with the management team, in addition to working with them individually, there's an additional fee for that. And then there's another fee, which is when we do retreats. Oftentimes in these firms or companies, when they're larger and they have this team of individuals, we want to do quarterly retreats. These quarterly retreats are intended to pull them off-site. And as we do so, we're going to facilitate the retreat. So we're going to provide the venue.
Offer.
Yeah, so we're going to provide the venue, we're going to provide the agenda, and at the same time, it actually affords the business owner something that is very unique. They don't have to facilitate the meeting, therefore it doesn't appear like they're manipulating the conversation. They get to sit back and with the team actually participate in the meeting, because there's somebody else there hosting it. And so they really appreciate that. So you've got 3 things that you're offering there. The one-on-one coaching that you're providing to the business owner. If they have a team, another fee to actually roll this out to the team, doing either, say, quarterly meetings or monthly meetings with them, and then that retreat. Those are 3 valuable services that they're oftentimes willing to pay for, that you're able to deliver and actually make a difference with.
Absolutely. And with our larger clients, especially ones that are being primed to sell or currently going through auction, that's been our exact approach, where we're in there in every professional meeting, whether it's their attorney or their broker or with their management team that's part of this deal. And it again creates that peace of mind and just that calm hand on the shoulder that we're here if you need support in working through these conversations, or just to bounce your stress points and ideas off of us.
Yeah. Now, you brought up what I'm going to call the dream team. So when you're working with a client that is going to sell and going to market, there is a group of individuals that we want to actually have there. And I'm just kind of curious, who makes up your dream team? What are the ideal individuals that you feel should be seated at that table to help that business owner?
Throughout the process, of course, it depends. But the go-to relationship manager currently on our team, I would say that's one of us. Ernie's a fantastic one. The third partner, he was on Forbes 200 list last year. So we're going through this process right now. And so then you have the broker, the bank, investment bank, attorneys, and those are the three heavy hitters at this point.
Very good. The one I would add to that is a wealth advisor, someone
Yes.
like a
Good
CFP,
point.
because
Yep.
when you actually, as the business owner, have this transaction, you've got this financial windfall that you're going to experience, but there's tax ramifications at an individual level, and there's various strategies you can use to mitigate some tax liabilities that can
Yes.
come from that. So if you can have at the table, like you indicated, the broker, they've got you, obviously, you're there. You've got the broker, you've got the M&A specialist, perhaps the banker, but obviously you've got the attorney. You've got those people there that are helping with so many of the litigious things, but at the same time, that financial planner to say, hey, let's structure the payout this specific way to help the business owner get the biggest financial windfall possible. It's one
Yes.
thing to be given all this money. It's another thing to lose it all in taxes. So
Right. And I'm so glad that you mentioned that, because this is a process, especially with the wealth advisor and the tax side, that begins years before you're ready to sell, is planning out what is the proper structure, what moves need to be made in advance, so that when a sale comes, we're in a very advantageous position financially, or the client is.
yeah, I typically use 3 to 5 years. Would you say that's the
Yep,
same?
that's exactly it. And that's
Yeah.
why it's so important, in my opinion. Again, I'm biased, but for any business owner that really wants to get the most out of their business, they need to be building their business to sell, even if they don't know how they want to sell it or how they want to exit. Because for better or worse, everyone exits. You could get hit by a bus, you could give it away to a family member, or you could have the ideal situation where it's planned and perfect and you sell it for maximum value. And that's why, even if you're starting out, you should be thinking through, what do I need to have in place so that no matter what, it is at its maximum value at that point in time.
Beautiful. Yes, completely agree. This has been an amazing conversation, and one that I was excited to have. And obviously, it's gone just as I had hoped it would. We've covered a number of great things here. Here's what I'm going to do. I'm going to kind of wrap this up.
Please.
But before I change the topic, I want to ask one last question, and
Mhm.
it's simply this: having gone through this journey, you obviously, with the CPA firm, reached out to Dave. You had this opportunity to collaborate with him. He obviously help you become a shareholder in all this. You've got it now, a third party. You've grown an amazing organization. You've received a number of accolades. Back to your spouse, back to the family. What's it been like for those who have been supportive to you going through this process with the stresses and such, the sacrifices that you made? What do you think's come of it that they've basically supported you in? How have they benefited? How have you benefited personally?
Personally, I have probably the most supportive family that you could ask for. I have a relatively small one. I have a husband, and anytime I'm stressed out with the business or I don't know what to do, because as you can imagine, this is a very challenging process to go through and you're learning a lot along the way as well. And he always reminds me that I need a little bit more confidence in myself. And so I'd say, if anything, it's probably strengthened our relationship, because it's allowed me to lean on him in ways that I didn't expect when we first got married 10 years ago. And so it's really helped me appreciate my family more.
I love that. I absolutely love it. Well, family is everything to me. So I think it's one of the things that we sometimes neglect too much, but at the same time, it's those who support us the most. So yeah, I appreciate your sharing that. Well,
Yeah.
here's what I'd like to do. Before I move any further, I'd like to actually point out that we have a great offer here. If you'd like to speak with her and have an opportunity to get a 30-minute little session, if you will, to get insights as it relates to her business or find out what you should be doing in your own company, I'd like you to take advantage of the opportunity found in the episode description, where you can now schedule a time to actually meet with Lera. And in doing so, she will actually do an accountability type session with you. And I would encourage you to take advantage of that and see what things you could actually be considering for your own business. And as it relates for accounting firms, those of us who are actually offering CFO services or wanting to consider doing this might be a great conversation for you to have, just to get some insights as to what she's found to be effective and essential for her firm to actually grow. So take advantage of that opportunity. In addition, with Universal Accounting Center sponsoring this episode, I want to invite you to take advantage of a few things that Universal has provided, one of which is a free ebook called Your Strategic Accountant. It is a book written for accounting professionals to understand what are those three core services that we were discussing earlier, what it is that your firm can do to be the premier accounting firm in your area, offering those services such as bookkeeping, accounting, tax planning and preparation, as well as CFO and advisory that we've discussed today. So get that book, read that, and see what it is that you can do to become the premier accounting firm in your area. In addition to that book is one called Your Profit and Growth Expert. It literally is what it is you can be doing as you meet with your clients in a CFO and advisor capacity. It's how to be that business coach. What does that consultative relationship look like? What does that engagement experience for the client have to be. And in doing so, reading the book, you'll find out what are those things that you can be offering as services so that you can get paid well as a business coach. So definitely check out that book. And then lastly, become certified as a profit and growth expert. This is where you can implement very, very important yet proven strategies to market, sell, price, and most importantly, deliver CFO and advisory services with confidence. It's as a profit and growth expert that you can literally step into that role with confidence and competence to get paid what you're worth. So take advantage of those opportunities and check this out now. Go to the episode description and find out those details there. As for the summary of this, I'm going to do a summary and then come back for a closing thought. But for the summary, I think this was a wonderful conversation. Clearly, we all started into this accounting profession for different reasons. Dad saying that money is something that you do need to know makes sense. That was great advice. Clearly, it's given her a wonderful career trajectory, and I think this is wonderful to step into the accounting space and find that you're doing well, but obviously maybe overworked and so forth, looking to branch out and leverage those connections that you have. She reached out to Dave, and it was perfect in the timing. There was an opportunity there. She was able with her husband to situate their finances such that she had a runway to begin with. She went out there, started her business, and it was with the intention of acquiring firms with the hopes of eventually flipping them. So we talked really shortly about what it is to acquire a firm. What are some of those ideal things that you're considering when you're evaluating that firm? And then in the valuation process, how do you determine what you're going to offer for that? I like that range that we identified of 0.8 up to about 1.5. Those things I think are very, very true. We had a great conversation about what that would look like. She mentioned that in acquiring the firms, she'll sometimes have those business owners stay on for as much as a year or more so as to help with that transition. Excellent insights. We discussed what it is for her business as she typically acquired tax companies, but then actually focused on taking those services and complementing them with bookkeeping and later tax services. I thought that was a great understanding of what she was doing to increase the client revenue per client, as well as the lifetime value of the business. Those things that we're doing there are obviously meant to create a greater valuation of her business as she's looking at some point to then sell. But the other thing that I thought was also helpful is the conversation that we had about CFO related services, what those look like, what it involves, how to explain that. We talked about kind of the presenting of the services using that gym membership example. Those things I think are very important as you're trying to explain your services to a potential client to help them realize, how is this going to benefit my business beyond just the bookkeeping and tax services I would expect. We were able to talk about pricing and found out that there's that range of 1,500 to 3,000. She's at that 1,200, eagerly looking at perhaps raising her prices. And then we talked about some complementary services such as fees to work with their management team, as well as doing retreats. So lots of information here today. I thought this was amazing. What would you like to leave as a closing thought, however?
I would say one of my favorite statements is that hard things are hard because they're hard. So if you're waiting around for things to get easier or a better time, it's just not going to happen and you're delaying progress.
Well said. That is a great way to end this. Hard things do take a little bit of effort. So that's very, very true. So well said. So here's what I'm going to do. I'm going to wrap this up. Obviously, if you haven't already subscribed to the podcast, I'd like to invite you to do so. Each and every week we have on the show various experts to share with us insights as to what we can be doing to offer quality accounting services and get paid what we're worth. It's here that you can actually hear those experts by subscribing and setting your notifications to each week hear these episodes. In addition to that, I'd like to invite you to go to universalaccounting.com. There at Universal Accounting, you can find in the navigation a podcast section where we've actually collected highlights. These are playlists that we've compiled that you can go binge listen to based on your current situation. So if you're wanting to know information related to marketing, selling, pricing, different services you should be offering, how to become a profit and growth expert, moving into the CFO and advisory space, tech stacks, training your staff, mental health, all those topics, go listen to the playlist there and you can binge list what's relevant to you today. In addition to all of those things, what I also would like to point out is we have GrowCon. GrowCon is a conference where we actually have individuals come and speak to us about what we're going to be doing in our businesses to have the best year yet. Every year we have these guests come to speak to us from the stage as to things that we need to be doing to work on our business, and you need to be there to hear those things. In addition, you want to meet with your peers. It's here that we get to interact with, rub shoulders with individuals like us that are running and operating successful bookkeeping, accounting, and tax businesses. Not only do you actually get to make new friends, relationships, network, but you also can oftentimes collaborate, find individuals that are doing things that would complement your services and better help your client retention. So definitely come and attend to hear from the experts, build peer relationships, and lastly, meet my team here at Universal Accounting Center. Those individuals are committed to helping you be in business for yourself, but not by yourself with Universal Accounting Center. So I look forward to seeing you at GrowCon. If you don't have your ticket yet, go to universalaccounting.com. There in the navigation, you'll see GrowCon. It's there. You'll get the information regarding the event itself, as well as be able to purchase your ticket if you don't already have it. And I look forward to seeing you there. In relation to all of this, if you'd like to actually find out more about the services we've discussed today or how to implement these things in your business, go to universalaccountingschool.com. There we have the lists of various programs and trainings that we offer to actually help you not only take care of your business, but also train your staff to offer quality accounting services and so much more. If you'd like to actually discuss these things, you can also give us a phone call, 801-265-3777. So always remember this, accounting success is universal. Take care, have a great day, and be safe out there. That was wonderful.
Awesome. That was a blast.
I loved it. That was a great conversation. So here's what I'm going to have you do.
Perfect.
In the net or in the chat. I gave you that text. I'm going to have you do that little promotional piece right now.
Perfect. Ready?
Yep.
Hi, this is Lera from Accountability Services. It was a blast to record this with Roger. It was an episode of Building the Premier Accounting Firm. We discussed the highlights of transitioning from a compliance-driven to a strategic-driven firm, and I invite you to listen and join us.
Perfect. That was awesome. All right. So here's what's going to happen. This has actually gone live. So it's been on the social platforms like LinkedIn, Instagram, or not Instagram, but Facebook and so forth. Perfect. So what I'd like you to do is just go find which platform you'd like and go like it, share it, comment on it, promote it. But in addition to that, Brian's going to take this recording and he'll create an episode for the podcast. We're going to release that